Welcome to today's webinar. My name's Jo Morvan. I'm the Editor-in-Chief of ACCA's Accounting and Business magazine. Today we're going to talk about how e-invoicing can help transform your accounts receivable and accounts payable functions and how to scale your global compliance. To talk about this today, we have Matt Harrison, who's EMEA VAT Solutions Director, and James Dodd, who's VAT Solutions and e-invoicing Manager, both at Avalara. Before we get started, I'm just going to run through a few housekeeping issues. So the presentation will be accompanied by slides that will automatically change as the speakers present. If you find they're not progressing though, you can refresh your browser with F5 for PC users and Command and R for Mac users. You can access the slides from the resources area. We'd be delighted if you sent us in some questions, and you can do that at any time using the chat area on your screens. We'll go through those in a Q&A at the end of the presentation. The whole webinar will last about an hour. You can enlarge the slide area of your screen by grabbing and dragging the bottom right-hand corner of the slide area window. There's also a help button if you have problems with the technology. Finally, turning to CPD, if you're an ACCA member, you can count this webinar towards your CPD if it's relevant to your career. You can apply the learning in the workplace and can provide evidence that you've joined us today. For that evidence, we've provided a personalised CPD certificate, which you can access via a certificate icon in the middle of the tray at the bottom of the screen. So that's it for the introduction. Now it's time to hear from the first of our speakers. So over to you, Matt.
Thank you very much. So yeah, as you mentioned, we're here to talk about the rise of e-invoicing and the growing need for tax technology. So we're going to cover a few different pieces today. So first, I just want to quickly talk through the agenda. So for those of you that don't know Avalara, we're just going to do a short introduction on Avalara and who we are. James is going to take us through e-invoicing 101. So just to make sure we level set and everyone's understanding what e-invoicing is, because there's some common misconceptions with e-invoicing. We're going to talk about some global lessons learned from the organizations, from businesses and stuff like that. We're going to move on to the future of e-invoicing. So what does it look like? What are the market trends happening? What are things happening in the market? And what are also kind of the mandates coming in the near future? And then we're going to talk about obviously transforming your AR and AP functions, what e-invoicing does to that. There's some key benefits for why people have been doing this over the last number of years, not just because of the mandates that have been coming, but in general, they've been looking to do this. Then obviously the growing need for tax technology. So this is really, really important. As the market changes, there's a growing need to implement tax technology alongside e-invoicing. And then lastly, we're going to cover how you can strategically prepare your business for the time ahead over the next 5 years. And then we'll finish lastly with the Q&A. So short introduction to myself. I've been in tax over 11 years. Worked for a mid-tier firm, come over to Avalara to focus more on software. But my key role at Avalara is to help businesses understand the value invoicing solutions and how they might fit into their business. So James, just like to give you a chance to introduce yourself as well.
Thanks, Matt. So yeah, I've also got over 10 years experience, predominantly in the finance transformation space, ranging from e-invoicing, ERP related and spend management. I've been at Avalara for nearly 18 months, but I have a key focus in the e-invoicing space. So I'm looking forward to taking you through, what we've got today in the presentation.
Thanks, James. So just briefly to start about Avalara. So we started in 2004. We're predominantly known across the North America for having a fantastic US determination. But over the last 20 years, we've grown across the world through acquisitions and organically, mainly for our partners. So we have a strong partner network. But we've basically branched out from a sales and use tax solutions to have loads of different solutions around all different tax types and compliance types. And one of the most recent acquisitions was our e-invoicing acquisition, which now supports over kind of 60 countries globally alongside our VAT reporting solution. So large coverage, always looking at growing that kind of global landscape as kind of you'll see soon, the e-invoicing mandates are growing, and Avalara is looking to grow with that. So I'm going to just hand over to James to do like a brief 101 on e-invoicing and to help you kind of just everyone be on the same page and level set of what e-invoicing is. Like I previously mentioned, there is a few misconceptions of what e-invoicing is. So James, I'll hand over to you.
Thank you. Okay, so as a starter for one, what we're going to do is just really introduce you to e-invoicing first. And some of you may know this, some of you won't. But essentially, it's just to help you understand what actually is an electronic invoice. So you'll see on here, we've got things around unstructured, hybrid, and structured invoices. But essentially, an electronic invoice or an e-invoice is an invoice that has been issued, transmitted, and received in a structured data format that essentially allows for its automatic and electronic processing between ERPs and tax authorities. Now, in the UK, for example, and other countries, you can issue an invoice as a PDF. You can send it via email. You can print and mail invoices to your customers. Now, that's what's known as an unstructured invoice. Okay, something that is visual but also human readable. Now, a lot of businesses will say, well, what if we send a PDF electronically? Does that not count? So the simple answer is no. Okay, an e-invoice must be issued by a supplier in a structured machine readable format that can then automatically be imported to the buyer's AP or ERP systems without the need for manual data entry. Okay, now typically this will be provided in something like an XML format or a JSON file or other structured data formats that are machine readable. Okay, now these formats are governed and controlled and decided by tax authorities in the respective countries. Now, that's what we would call a structured invoice. We also have hybrid invoices, okay, or a hybrid file that's both human readable and machine readable, such as a Factor X, okay, which is essentially a PDF file with an embedded XML file. Now, this is predominantly used in the likes of Germany and France, and we'll touch upon this as we go through the presentation. But what we just wanted to do was set the scene to help you understand actually what is an electronic invoice compared to what we would typically think is just an invoice today. Now, how does e-invoicing actually work? Now, I mentioned previously about creating a structured invoice, okay? Now, the origin of this data is in the supplier's source system, okay? Your ERPs, for example. And then the final destination is the buyer's ERP with a few steps in between. Now, an e-invoicing solution essentially transforms invoice data into a structured machine readable format, and then typically involves other components such as digital signatures, digital archiving, QR codes, and specific encryption. Now, where e-invoicing is mandatory, typically governments or tax authorities will dictate this format. Okay, they'll dictate the format of the invoice, and they'll dictate what data is required within the invoice. And what tax authorities will also do is they can have a role in approving and clearing the invoice before it's allowed to be issued to the buyer. And we'll touch upon what that means and those types of models. But they could also have a role in actually issuing the invoice themselves through a tax portal, for example. Okay. Now, there are some clear benefits to e-invoicing, which were predominantly adopted and driven through tax authorities. But the benefits directly to you as a business, will be seen through, a huge increase in not just efficiency, visibility, and cost control, but, this is driven through touchless and fully automated processes that is going to remove human intervention. Now, what I just mentioned was something around tax authorities having an active role in the invoicing process. Okay, now that happens through, depending on the model and the e-invoicing model. Now, given the legislative complexities that we're going to talk about, you look at different regulations, having to maintain this and control this can be a full-time job. Okay, but on top of evolving and changing regulations is the technical models that are implemented by tax authorities. Now, as tax and invoicing rules fall under the responsibility of individual countries, so are the VAT reporting systems and the resulting technical requirements that country governments might dictate. So depending on the selected model, a country tax authority might be involved in, in the e-invoicing process in different ways. And what I'm just going to do is talk about this on these models that you can see on the screen. So, the first box is what we would call a four-corner model. Okay, it doesn't involve the tax authority, and it's where an invoice or invoice data gets transmitted from a supplier to a buyer through a network of certified invoicing providers. Okay, such as PEPL. Now, as the invoice and the invoice data goes through that process, okay, there is transactional tax information that's involved in the invoice. Now, that doesn't go through to a tax authority throughout this model, but it does actually go to the tax authority at some stage. Now, whether that's through a monthly or quarterly basis through your traditional VAT return. Okay. As we move on, what you'll see here specifically for Hungary, for example, is what we call live reporting, okay, or real-time reporting. Now, this is where the invoice or the invoice data is delivered from a supplier to a buyer. The data then gets transmitted to the tax authority in parallel or shortly after. Now, when the tax authority receives the data, they're only playing a passive role, right? They're not approving, they're not clearing the invoice. All they're doing is receiving data, so they understand what has been, what's being sent from the supplier, what's being received from the buyer, and what they're paying for. Now, as we move through the processes, other models come into play. Okay, in Brazil, for example, and in predominantly in Latin America, is what we call the pre-issue or the clearance model. Okay, this is where an invoice gets created, it gets sent to the tax authority. The tax authorities then approve the invoice or reject it, depending on whether it meets the requirements. And upon it being approved, it can only then be sent through to the buyer. So they have a direct and active involvement as to when that invoice can be issued through to the end buyer. We then also have a what we call a government issuance model. Okay, now this is typically, this is used in Italy at the moment, and tax authorities receive the invoice data first. Okay, so it will leave an ERP, it will come into a solution provider who reformats the data, sends it through to the tax authority, and then it's the responsibility of the tax authority to create the invoice. And then the tax authority actually issues that invoice to the end buyer. So in Italy, for example, you can't, if your customers were direct businesses, you actually can't issue the invoice directly to them. The tax authority has to do it on your behalf. Okay. And then what we have is called the CTC, Continuous Transaction Control Model, okay, with real-time reporting. So this model is in play, but also being considered by several governments throughout the world and tax authorities that have plans to mandate e-invoicing. Okay, it kind of combines the four-corner model with one of the other models that you see on the screen. Okay, so invoice data gets transmitted from the supplier to the buyer and to the tax authority over a network. Okay, whether it's through Avalara or PEPL or other providers that have networks through interoperability agreements. Okay, and the tax authority is involved through either a real-time reporting model or a clearance model as they receive the invoice data. Okay, but there is a huge advantage to a CTC model, which is around lowering the burden on the tax authority and also distributing the risk of invoice and data and tax fraud. Okay. But what we just wanted to do there was highlight to you the different models that are in play at the moment, okay? But the important takeaway here is no two countries have the same model, have the same format, have the same process. Now, France is currently in the process of implementing or launching a new e-invoicing mandate that goes live in July 2024. Okay, and as one of the biggest economies in Europe, there's a reason why we're putting this is on the screen to highlight to you what is happening in Europe at the moment. Now, this is actually an evolution of the current business to government mandate that exists today. Okay, and it's being expanded to cover business to business transactions, but also business to consumer transactions. Okay, so all French businesses will need to be able to receive e-invoices from their suppliers in July 2024. Okay, but what I'm also going to do is talk to you about some of the key details of this mandate. Now, receiving, businesses have to be able to receive invoices, but at some point, businesses are also going to have to send and issue e-invoices. Okay, now it's going to be mandatory for e-invoicing for domestic business-to-business transactions in France, but it's also going to be mandatory for e-reporting, okay, of the transactional data for cross-border business-to-business transactions, both sales and purchases, but also business-to-consumer transactions, okay, that are taxable. Now, within France, okay, unlike most other countries that implement e-invoicing, France is actually going to have multiple different formats that they're going to implement, okay? We've got one called UBL, we've got C2, and then there's Factor X, okay, which is that hybrid model. Now, VAT-registered French businesses and established companies in France, they're going to have to issue invoices to business customers in France depending on where they fall within the mandate and what the legislation is. Okay. Now, it doesn't currently apply to foreign businesses without an establishment in France. So the focus on France is purely for VAT-registered established businesses to comply with the e-invoicing mandate. Now, foreign companies, that aren't established in France, but they are VAT-registered there, okay, they will be subject to new e-reporting obligations where transactional data between businesses and also direct individuals will need to be transacted or transmitted to the tax authority. So this mandate is going to impact anyone that's VAT registered in France, okay, from a business-to-business perspective, but also anybody that transacts with direct to consumers in France as well. Now, the process will involve what's called a PDP, which is essentially a third-party provider, like Avalara or any other solution provider that has that certification, to transmit invoices between each other before they end up in the buyer's ERP. Now, the French government have also recently announced something called the PPF, which is a public portal. Okay. Now, the public portal is also going to be utilized for issuing and transmitting invoices and invoice data, but it's going to have very basic core functionality that will only likely be used by the smallest companies in France. But what you see on the right-hand side is a timeline, with a launch plan of when this is going to impact businesses. Okay. So you'll notice that in July 2024, all businesses have to receive, but also large companies, enterprise businesses have to issue electronic invoices. And then as you move on to January 2025, small and medium-sized businesses then have to start issuing electronic invoices, but they will already have to be receiving them from July next year. And then the very, very smallest businesses in France are then going to fall into this mandate in January 2026. So there is a progressional launch plan happening in France. And if you have any plans to launch into France, or you're already in France, then this is just something that you might want to be aware of that will impact your business moving forwards. Now, when we talk about regulatory and operational challenges within e-invoicing, e-invoicing is a very, very complex subject. Okay, there's different mandates, there's different e-invoicing rules and regulations. Now, there are many challenges within this space, most notably, the evolving regulations. Okay, tax authorities don't just implement an e-invoicing mandate and say, yep, that's in play, 15 years time, it's still the same mandate. Okay, they do change over time. Okay, and also most businesses don't have the resources and the knowledge to maintain or follow the complex e-invoicing rules. Okay, now I mentioned before, no two countries adopt the same process. Okay, formats will be different, data required will be different, the model will be different. Okay, now, in addition to this, the automation and the connections to the tax authorities also presents a whole different challenge. Okay, so there is the regulatory challenge associated to understanding, the tax rules in those countries. You have the operational challenges associated to connecting to a tax authority's portal and being able to issue and be certified to share data to the tax authorities. Okay, but and this results in, if you don't follow the regulatory requirements and you're not compliant, businesses are met with really strict fines. Okay, and these do differ depending on the mandate, depending on the country. Okay, but essentially e-invoicing technology enables you to stay compliant throughout this journey and ensures that you meet the current and changing obligations. Now, just to give you an example of that, you can see how mandates have changed by just on the, we're highlighting here, this has been based, for example, on revenue in India. Okay, as your revenue increased, you would then have to comply with the different parts of the mandate, or the mandate would come into play because your revenue, you were starting to exceed a certain threshold, or you're within a different threshold, and that comes into play in a different part of the year. Okay, but your revenue in India might be different to your revenue in France or in Colombia, for example. So it's about being able to maintain and understand where each part of your business unit or different entities fall foul to different e-invoicing requirements. Okay. Now, what this is going to lead on nicely to is the trends within e-invoicing. Now, over the years, governments in countries all over the world started, different initiatives to modernize their economy, become more efficient, limit the space for tax avoidance and fraud. Okay. Now, there are different activities that they put in place, whether that was, with requests for digital reporting of tax obligations, up to, the strict usage of e-invoicing models, with tax authorities being directly involved in that invoicing process. Now, as each country dictates its own rules, the overall e-invoicing and digital landscape, is essentially very fragmented, right? However, the trend towards invoicing and tax reporting digitalization is truly undeniable, right? Tax authorities and governments are all starting to introduce different mandates, different activities to ensure that businesses are complying with, legislation and regulatory requirements. Okay, now, the trend towards digitization is growing, with more and more countries requesting digital data. Okay, and the trend started 10 to 15 years ago, okay, in Latin America. Now, this is, as you know, is expected to grow. And what you're going to see on the next slide, is the upcoming mandates that are being launched over the next 3 to 4 years. Now, this is all designed to, reduce things like the VAT gap, okay, and ensure that businesses are being compliant, and that compliance is being standardized across the country. Now, with e-invoicing mandates, okay, and the timelines for e-invoicing, now these are subject to change, okay. Now, for businesses maintaining operations in several countries, the constant change in requirements is a challenge, and we've already touched upon this. But you'll see at the start of this, right, over the last kind of 10 to 12 years, Latin America was a huge driver, as well as several countries in Europe, about introducing obligatory usage of e-invoicing for different types of business relationships and different transactions. Now, they will introduce this, either a step-by-step process, okay, starting with business to government, and then extending that mandate and evolving it to business, and also, business to consumer. Or they might just do it in one big splash, okay? And that's what they did in Italy, okay? But essentially, what you're seeing on here is what has happened in the past and what's coming over the next couple of years. And there was a huge catalyst in Europe in 2024, okay, with the likes of Poland, France, Spain, Belgium, Slovakia, Romania, all introducing e-invoicing mandates, okay, that's going to impact businesses throughout Europe. Okay, but it doesn't just stop in 2024. This is also, rolling into 2025 and, 2026. Now, a lot of the stuff that you see on here is very European focused. But, when you look at e-invoicing outside of Europe, this is something that exists all over the world, okay? It exists in the US. There's a federal pilot ongoing in the US at the moment. You've got Latin America, you've got North Africa and the Middle East. Saudi Arabia have just launched phase 2 of their e-invoicing mandate, and there's new mandates that are all kicking off and going live in Asia Pac, with the likes of Australia, New Zealand, Singapore, Japan, the Philippines. Okay, they all have mandates, and this is a global requirement that businesses need to start start to understand, but also start to build a strategy into business strategy so that they're prepared and ready for this should they fall foul to these requirements in the future.
So James, we're just going to go into the first poll that we've got for today. So just going to ask a quick question. Are you going to be impacted by the invoicing mandates over the next few years? So obviously you've seen a number of countries there on the previous slide. We'll go and talk about the VAT and the digital age proposal in a minute, but are you looking and seeing any of your kind of business functions mention about e-invoicing, or are you seeing kind of countries that you're located in on the previous slide? Be great to understand for those of you, if any of you are kind of affected from that point of view. So James, I think the important thing kind of I'm taking away from those slides is that this is a sweeping kind of phenomenon across the globe. It's gradually just working its way. Like, it obviously started predominantly in LATAM. It's kind of moved over to Africa and to Europe and to APAC and potentially touching in North America now. So it's kind of touching all the different continents around the world. And so I'd be keen to get your thoughts on how long do you think this is going to take for tax authorities across the world to kind of adopt this on a more global basis? I know we're starting to see the trend.
Yeah, so I think, when you look at, countries that have adopted this, right, they originally adopted it because of, tax fraud and a VAT gap. And there is clear evidence of that being reduced in countries all over the world that have adopted these mandates. So, tax authorities only have to look at, and see the evidence of what's happened, elsewhere. Do I believe every country in the world will do this? I believe the biggest economies in the world will do this, and economies where there is that challenge around fraud, okay, and tax fraud and a larger VAT gap. Will there be a unified approach to e-invoicing? Probably not, because it's such a complex scenario and tax authorities want to have control over it. So having one format that suits every single tax authority and one model that suits every tax authority is likely to never happen. But we will see, and we are seeing, huge adoption, especially in Europe this year and next year, and also in Asia Pac, which is starting to catch up with Latin America. So, and then also what's happening in the US. So I am expecting to see a lot more countries, take this on, because the results speak for themselves. Yeah,
great. Thanks, James. Do you want to give a final call to anyone that wants to put in on the poll? And we'll quickly do the results. So one thing I want to mention, James, is a few kind of discussions that I've seen over the past kind of few years around the tax authorities is that one of the drivers is obviously the VAT gap, but there's other drivers behind this. So, and I know we're going to cover this later on in the presentation, but one of the key drivers is visibility for the tax authorities. Like, there's a big shift and change in trying to get more data and more data to make better informed decisions from the tax office. So I think, like, they may have the first kind of initial thing. Like, I know Italy was one of the ones that really kind of had a big VAT gap, and that's why they were so keen on implementing it straight away. But I think there's other elements for the tax offices that outside of the VAT gap that they're really, really looking to kind of push.
No, absolutely, and I couldn't agree more. Italy is a very unique example when it comes to digitizing, a lot of processes, right? You can't actually go into a shop and buy something with cash over a certain value anymore, right? They make you pay on a card, so there's a visible physical transaction that has happened, and this is to stop. Again, it goes back to not paying tax and so on and so forth. But what they are doing is going back to the visibility piece that you said. They are wanting to have more visibility on all transactions that are happening within Italy. And the easiest way to do that was to put a process in place around how you pay for certain things. So that is a follow-on effect of what has happened from e-invoicing. And that's a follow-on effect of what we've seen that in the UK with making tax digital. Okay, and automating that process. So, it's not just about reducing, the VAT gap and trying to eliminate fraud. It is about tax authorities want to have visibility on transactions that are happening within the country.
Cool. All right, we're going to finish the poll now. So, okay, so almost 2/3 of you, or just over 2/3 of you, have said you're going to be affected by the mandates over the next 2 years. That's quite a lot of people. So I think the one thing I want to kind of go on to next is like the transforming in AR and AP functions. This isn't a new thing. Like this has been going around for a long period of time, where businesses obviously realise that the paper invoices are costly and they lead to potentially issues and errors and stuff like that. So this isn't a new thing. It's just the mandated adoption of this is kind of proving to accelerate businesses having to become kind of more efficient. So like one of the first things that obviously the advantages that obviously businesses have from this is the faster processing time. And so obviously where you've got the traditional methods of the paper and the PDF, it requires someone to either manually input data, and it takes time for them obviously to receive those invoices. So having this data flow automatically into their ERP is obviously it's going to be lead to much faster processing times of their own invoices, and obviously the invoices that they're potentially going to be paying. And the next piece is obviously the increased accuracy. So taking that kind of human intervention outside where there's potential issues around manual data entry, that increased accuracy just allows for you to be kind of more confident in the data you've got within your systems. So it obviously helps with disputes on invoices, like they can be resolved a lot quicker and a lot smoother, and obviously improves overall accuracy. The next thing is like the streamlined workflows. So with this, it allows you to kind of pretty much fully automate your AR and AP functions. So such things as invoice creation, the distribution, the payment processing. It allows for a much smoother, streamlined workflows for around those kind of three key areas. And one of the things that businesses focus on the most is that improved cash flow. So because everything's able to be faster processed, more streamlined, more accurate, it improves that cash flow that businesses are kind of so focused on keeping within their business. And so when you're doing this, it's not just about like being mandated to do this. A lot of businesses, obviously, like I said, have been doing this for a long period of time. So improve that cash flow is one of the key benefits that those businesses are always kind of focused on from what we see. And lastly, but not least, is the increased visibility. So businesses are becoming more focused and about making better business decisions. So they get increased visibility around the data. Obviously, they're both AR and AP functions, gives them both AR and AP functions are all invoices are kind of going through a streamlined process. It allows them to have better visibility on a more real-time basis. And they can, like I say before, you can kind of easily deal with kind of the cash management and the resource allocation and stuff like that. So it makes things a lot easier to deal with on the AR and AP function. So I think the key takeaways here is just e-invoicing. It's just going to improve speed, accuracy, and efficiency, and it's just going to help businesses kind of streamline their whole AR and AP functions overall. So look, James, you've seen this many a time, like businesses are trying to do this. What would you say is the key one of these that businesses always bring to you that they want to try and improve?
That's a great question. I think, companies want increased visibility. There's challenges around, duplicate invoices, paying for something that's already been paid for, issuing, duplicate invoices, or create issues on the invoice or an incorrect invoice. So visibility isn't just around cost control. Visibility is about the way something is created and sent as well. I would have to say visibility, but accuracy and processing go very, very closely together. And most companies would say to me that they want to have multiple benefits to e-invoicing and not just focus on one thing.
Cool. Thanks, James. So the next piece I just want to lightly cover is the VAT and the digital age mandate. So If you haven't already seen this, I would suggest going to do a bit more research on this and how this might affect your business. But some of the big things, I'm just going to highlight some of the big things that have come out of this. So effective from the 1st of January 2028, all intra-community suppliers within the EU will need to have an e-invoice associated to this. So this is going to be kind of one of the largest, I would say, e-invoicing kind of adoptions globally. So it's going to be like 27 different regions having, when goods are trading, e-invoices are going to have to be going through different systems. This is going to be obviously, this obviously has got a 5-year lead time, but it's going to come around very quickly for businesses, because it's not just these things to focus on. There's also kind of the local domestic mandate. So they are putting in they've put in a more kind of structured form and a better standard for e-invoicing. But again, like James mentioned, they're not mandating everything has to be uniform and exactly the same, because they know different tax authorities have different kind of ideas, different issues that they need to kind of tackle. So they put in guidelines, but they haven't put in a solid structure that everyone has to follow exactly to the same standard. One of the key things that I think that has happened is the removal for the need for the customer to accept e-invoices. So this means that it kind of opens out to a new model, new models like the CTC to be able to be used. And obviously, lastly, is the derogation. So they've now, prior to the mandatory trade proposal, businesses had tax offices had to apply for a derogation to be able to introduce e-invoicing, which could take a long period of time. So obviously, the rollout for e-invoicing was a lot slower. But now, removing that derogation means that they can create their model and adopt it a lot quicker. And obviously, with everyone having to adopt that model by 2028, we're going to see all of the EU countries bring out models over the next kind of 5 years. So how this now fits in with tax and tax technology. So the past was periodical filing, like people having a month end and then getting all those transactions together and then obviously filing those returns, and just taking maybe a local tactical approach to each region, like having local people on the ground where they're kind of filing the returns, maybe not talking to each other. And again, like traditional businesses have been outsourcing and using tax accounting firms to potentially do this as well. So there's obviously a large range of different stuff, but there's been a more kind of what we call a sticky plaster approach, a whack-a-mole approach, whatever you might want to call it. And it's just about trying to solve different problems individually within different countries. Now, the present is we're in this transition phase where we're kind of moving from the historical position into this future, but we're not quite there. And this future looks like more real-time models where you're going to be issuing e-invoicing, potentially doing some e-reporting, potentially doing VAT reporting as well. So having to marry up 3 different types of compliance. So it's leading like leaders and CFOs and VPs and kind of business in general to kind of think about this more strategically in a global approach and how they actually want to roll out the mandates, how they want to meet the different policies, and how they actually want to streamline their business. So businesses are now looking for that single scalable solution where they can actually look after e-invoicing, look after e-reporting, and look after kind of tax, all within kind of the same kind of remit, and everyone be kind of talking, singing from the same hymn sheet. And obviously, like we said, aligning tax and business processes, it's just becoming so much kind of more aligned between the two. So some of the other things I have to deal with what's going on is the change in regulations. So we've seen a number of different changes in the rules and regulations over the past few years. There seems to be something happening every year from the EU at the moment. Obviously, they're introducing new returns, so SAFTs are being introduced, control statements being introduced just to get more data and understand more data. So all of these changes are becoming really, really difficult for businesses to kind of keep up with. And then you've got, on top of that, you've then got the evolving marketing dynamics. So again, tax authorities trying to change different elements, introduce different elements to kind of get more data, get more understanding from businesses. And what it doesn't help is businesses take a while to move to these kind of models. And if they're trying to have to do 3 or 4 different models in 3 or 4 different countries, it can become, the evolving market dynamics can become incredibly difficult. And then you've got the kind of technological complexity. So obviously with the change in moving from the whole manual format where businesses could take more time to look at their data and understand their data, then now everything has to be more real time and more technology involved. So everything has to be cleaner and quicker, and that kind of move towards that, what the tax authorities want, is going to have to involve technology. And the last piece of this puzzle, and I'm sure many people have kind of felt this over the past few years, is the lack of resources and expertise to adopt this. So the lack of resources kind of been businesses obviously typically trying to control the amount of resources they put within their kind of finance functions. But then the expertise is we're in this transition phase where we're moving from the manual kind of world into the technological world, and what's happened is there's a finite amount of expertise who actually know about e-invoicing, about e-reporting, and about VAT reporting, and how it all kind of fits together. So this is what businesses again are kind of struggling with. So I just wanted to pull a few stats that come from one of our recent surveys. So 93% of our respondents said that their budgets are going to remain flat or full. So it means they're expected to kind of do more or do the same with less. And so that becomes obviously really difficult for those kind of finance organizations. And the second piece is only a third expected to actually have increased headcount over the next 5 years. So again, they're having to do more of the same with less. And so with the introduction of technology, it kind of can put a different slant on how you can organize your kind of functions within your finance function, because some of the stuff that was traditionally done manually it has to be done with technology in certain instances, but there might be a greater need to move to technology with those kind of constricting budgets. And lastly, 92% of people, we talked about how many mandates are coming and all the different reporting that's coming. 92% of people expected to be moderately or highly impacted by these kind of changes over the next kind of 5 years. So some interesting stats there from the finance organisation, but it's really just key to see how much this is changing and going to be changing over the next 5 years and affecting businesses. So before we go on to our final slide, I just wanted to kind of do a quick kind of recap on stuff. So the traditional indirect tax compliance model is changing. It's developing. It's changing all the time, and it's not uniform, which is not helping obviously businesses transform through this. James obviously talked about the CTC model. So the CTC model, and including pre-clearance, is being kind of adopted more than the old kind of post-audit model. And so what it means is businesses are having to transact in more real time. So it's moving the way businesses actually not only interact with tax offices but interact with other businesses as well, which is really obviously, it's great for businesses to try and become more streamlined. But I think the moving the tax authorities are kind of moving them quicker along that journey. The way this is the most interesting piece. The way tax authorities are going to audit businesses is going to be changing. So we're not going to see the typical turn up at your door and kind of the tax inspector comes in and asks to see loads of invoices. They'll already have all of your data, and they'll have all the company's data that you're going to be trading with. So they're going to be able to do kind of more real-time audits and be able to kind of maybe understand more about your business and different businesses within your network than you do. That's how much data the tax authority is obviously going to have. Obviously, where tax authorities are going to obviously validate those e-invoices before authorizing delivery, it's gonna mean that invoices will not be paid or will not be delivered unless they kind of follow that model. So it's important to get that right first time, because otherwise businesses aren't going to get paid, their cash flow is going to be affected, and obviously it's going to affect their day-to-day running. And again, I think the fifth point here is just every transaction the tax offices are going to go and get more data than they previously had. So those of you who have to submit a SAFT is a large range of data they now provide. You have to provide to the tax office. Traditionally, they only had the information within the boxes, so it was really hard for the tax authorities to kind of make interpretations of whether someone was kind of reporting incorrectly or making mistakes or even reporting fraudulently. So the granular data that now asking for is going to give them that better visibility. And lastly, we talked about how important data is. And so having that greater visibility for businesses is going to help them scale, it's going to help them understand their business, and it's going to help them actually grow. So this is one of the bonuses for businesses, is moving to this kind of e-invoicing, tax technology kind of world will hopefully give them a better understanding of their business in a more real-time format. So things I would say, key takeaways. So awareness, make sure that you are aware of the e-invoicing mandates that are coming within your region, and make sure that you're prepared for them, because if you can allow yourself to get knowledgeable on them, what you can do is you can prepare for the data that's needed. You can look in your ERP to make sure that it can be extracted and it can be sent in the right formats. So are you making yourself aware of what stuff might affect you? So horizon planning. Make sure that it's not just the mandates you're aware of. Make sure that you've got some sort of vision around when mandates come up. How are you actually going to plan for them as a business? How are you going to meet them? And James talked about the differences. So how can you look for synergies within your business to help you kind of meet those requirements on a more standardized basis? So rather than having like individual suppliers in each country, can you try and consolidate them into different regions, or can you consolidate them into a kind of global solution? Which obviously leads me on to the last point. We're seeing the most need now for a single scalable global solution, because e-invoicing isn't going away. It's only going to become larger. It may not reach every country in the world, but I can assure you the key countries around the world are implementing this, and they're looking at how their systems can do this. The other element is it scalable? Can you add new countries seamlessly? Or can the solution you have add the new data fields? Because I was listening to some of the South American tax authorities talking about what their plans are, and they're on like phase 1 and 2 of a 10-phase plan. So their plan is to constant changes over the years to the mandates. So it's not just about finding a solution that fits you today, but it's about finding a solution that fits you with all of the stuff that's going to be happening and changing over the next kind of number of years. Because one of the key thing is each tax office is learning off someone that does something new. And so every time the solutions are becoming more complex or more granular, because they want to have the best model and get the most information out of what they introduce. So James, before we kind of finish, is there anything you kind of want to add on this? Like, there's 167 working days until 2024, which seems like a long time, but that's when some of the portals are going to become open for people to do like testing for the different mandates for next year. So it doesn't sound like a very long time to me about trying to find a solution and start like actively looking at testing and stuff like that. Because what you don't want to be doing is coming to July 1 and then not being able to issue invoices.
Yeah, exactly that. I would say don't wait for something to come into play. The information's there. You have the visibility of what's coming, and it's about putting a plan in place or having a strategic plan to help help the business become more efficient, become compliant with what's required in those countries. So it takes time to implement these sorts of processes. Just my recommendation would be, if it's going to impact you next year, now's the time to start that planning.
Awesome. All right. I think we can now lead into the final poll. So do you have any do you have a strategic plan in place to comply with the upcoming kind of VIDA requirements? So obviously we talked about the fact that it's going to hit every EU country Have you kind of created a plan already, and you kind of it's ongoing and it's in development? Have you not yet started? And have you got a potential problem and not yet started, or do you not have any regions or anything that seem to be affected by the upcoming mandates? Be great to kind of hear from you. So James, like, I think the key thing that I would say that everyone needs to take away is, like, streamlining your business. It can be difficult in the beginning, and meeting these mandates can be difficult in the beginning, but there's so many advantages to actually moving to this more kind of real-time model. What are your thoughts on
that? Yeah, I'd agree. Advantages of moving to a model that enables you to have more visibility and more control over what's happening within the business, especially on a multi-country approach. The benefits are there to see for everybody. If this wasn't something that worked, tax authorities and businesses would already have been adopting it all over the world. Okay, the UK and businesses in the UK are having to do this where they have international presence, and it's to your point earlier, Matt, it's not going to go away. So having a clear plan and a strategic plan around this is only going to benefit businesses moving forwards.
Awesome. Let's take a look at the results. So that's interesting, and that's fairly typical of what we were kind of seeing. The larger businesses have got a plan and they're getting going, and so there's still a number of businesses that are still in the process of creating that plan or not yet started, kind of. So it's interesting to see that. It's interesting to see. Obviously, I would expect kind of 23% roughly not affecting them, but it's really interesting not yet started. That does kind of lead into what our expectations kind of are. We're probably seeing a lot more businesses H2 looking to kind of start putting a plan in place and looking at kind of vendors to help them. So I think we can move on to the Q&A.
Great. Thank you very much, guys, for a really interesting presentation. We've covered quite a lot of ground in a short time, but it's been really useful. We've got a few questions, if you don't mind, just over the next couple of minutes. So the first one is, what comes after making tax digital for VAT?
So MTD is like phase from, and this is my opinion. I've said this many a time to our team, but MTD is phase one of probably 4 or 5 phase plan. Like, there's at some point the UK is going to potentially adopt e-invoicing, but MTD is just making everyone to that point where they're electronically submitting. At the moment, then they're still kept the 9 boxes. They're not introducing SAFT. So there's a lot of stuff I think that the UK Tax Office is still planning, but they've probably got other things they're looking to kind of solve between now in the next few years. I know there's obviously quite a number of different MTD elements. They're looking at private tax, they're looking at corporation tax. So I think there's a lot more to come on the indirect tax side. But there's nothing I would say coming in the next 1 to 2 years. I would say it's still a long way off. I think they're testing to see how the EU gets on with all the introductions.
That's useful. All right, thank you. So just time for a couple more. Is the UK going to implement e-invoicing?
That is a great question. And okay, so the easiest way to answer this is, and I alluded to this before, right? Originally e-invoicing was driven out of tax authorities wanting to reduce fraud and the VAT gap. Okay, now the VAT gap in the UK is actually estimated to be close to £8 billion. Right now, before we left the EU, the VAT gap in the EU was 90 billion. Okay, at that point, so nearly 10% of the EU's VAT gap was made up out of the UK. Now that's a lot of money for the tax authority to be losing, right? So that's the first thing. E-invoicing actually already exists in the UK from a business to government perspective when you're supplying and transacting with the NHS. Okay, but for business to businesses and and B2C, it doesn't exist. So and it's not as easy as saying, oh, we're going to implement a new invoicing mandate. Okay, look at France. Okay, they've been in planning for years and it's been pushed back and back. Okay, Poland has been in planning and that was due to go live already, and that's been pushed back 12 months. The US have a federal pilot in place, which has actually been in planning for 6 years. So, adopting something like this in the UK, at my opinion, I see will take an unbelievable amount of planning, right? They would have to consider things like an invoicing standard, right? What model will work for the UK? An invoicing standard. They'll run feasibility assessments and market assessments. They'll then have to launch a pilot like most other countries do. And then they'll launch a voluntary process that will then evolve over time, going from voluntary to mandatory. Okay. Now, that there's a lot of steps involved in this. And like Matt just alluded to with MTD, of like a multi-phase, approach that they have in place, that's no different to e-invoicing. So do I think it will happen? Yes. Do I think it will happen within the next few years? Absolutely not. But that doesn't, it's still, e-invoicing does impact businesses that, UK businesses that are VAT registered outside of the UK and have physical presence in mandated countries. So there is still a requirement for UK businesses to comply if they fall under the mandate.
Okay. Lovely. Thanks very much, guys. Unfortunately, we've run out of time, so we can't really take any more questions at this point, but we really appreciate the time you've given to this and really appreciate the audience's participation in that and the polls, and we hope that you found that useful as well. So thank you very much, everybody, for your time today. Nice to see you and hope to see you all again soon.